Are you struggling to find the perfect chart of accounts for your restaurant? Well, look no further. Picture a restaurant on a busy night. Great food, fast service, and 100 tiny money decisions happening at once. Now zoom out to the part guests never see: bookkeeping and accounting. If you've ever been involved with a restaurant, you know it's not easy. From managing staff to controlling cash flow, the restaurant business is incredibly tough. And here's the thing: while great food and service are essential, there's one critical factor that can make or break your long-term success: effective bookkeeping and accounting. In this video, we're walking through a restaurant-specific chart of accounts: what it is, how it's structured, and why it's one of the most practical tools for understanding whether a restaurant is truly profitable. Think of your chart of accounts as the plate you use to create a masterpiece dish. Without that basic blank canvas, no matter what you put on top, it will surely fall to the ground. And similarly, your business could fail. So here's the burning question that keeps restaurant owners up at night: how can you possibly master your finances when your restaurant is essentially running a manufacturing plant and a retail store under one roof? That's right, restaurants are truly one of a kind. They are one of the very few businesses that transform raw ingredients into finished products and sell them in the same facility. It's tough. From managing complex human relations to tracking daily cash flow, it takes a whole lot more than just great food and service to stay profitable. This unique hybrid nature makes restaurants genuinely one of a kind, and that's exactly why traditional accounting methods just don't cut it. Without clear financial visibility, you can't tell if you're actually profitable, where your money is going, or which parts of your business are bleeding cash. This isn't just about numbers, it's about survival. Despite this unique complexity, here's where most restaurateurs fall short. When setting up accounting software, they rely on generic, preloaded templates. You're asked what industry you're in, and boom, you get a preset chart that supposedly fits your business. But if you've tried these, you know the truth. Sometimes they bombard you with way too many accounts and sub-accounts that make no sense for a restaurant. Other times, they give you far too few, leaving massive gaps in your financial tracking. It's exactly like trying to cook a gourmet meal using a toy kitchen. The tool simply doesn't match the job. These generic templates treat your unique restaurant operation like just any other small business, completely ignoring the intricate flow of ingredients, labor, and sales that defines your world. And if the structure doesn't match how your restaurant really runs, reporting becomes confusing instead of clarifying, which leads us to the key idea that changes everything. So what's the solution? Enter the principle of mise en place, the French culinary phrase meaning everything in its place. Just as a professional chef organizes their workstation with precision before service, your chart of accounts needs the same meticulous structure. This dedicated framework assigns every single dollar a specific, convenient home, giving you the perfect blank canvas so your business masterpiece won't crash to the floor. The approach is brilliantly simple. Assign specific number ranges to each financial category. Assets live in the 1,000 to 1999 range. Liabilities occupy 2,000 to 29.99. Equity takes 3,000 to 39.99. Revenue from 4,000 to 49.99. Cost of goods sold from 5,000 to 59.99. Expenses spread across 6,000 to 7,999. And other income and expenses fill the 8,000 to 8,999 range. This numbering system becomes your financial mise en place. And with that backbone in place, we can now fill in a restaurant-ready sample chart that a bookkeeper can actually use day to day. Now let's get to the concrete result: a comprehensive, restaurant-specific chart of accounts that captures every financial nuance of your operation. On the asset side, you're tracking what you have: cash on hand, multiple bank accounts, accounts receivable, and critically for restaurants, credit card receivable and house accounts tracked separately. Inventory is broken out in a way that actually matches operations. Food inventory, beverage inventory, and bar and consumable inventory all live in their own dedicated accounts. Fixed assets show up clearly too: computers, furniture, and fixtures, leasehold improvements, alongside accumulated depreciation, capitalized startup expenses, and security deposits. Then on the liability side, the chart captures what you owe or hold: accounts payable, multiple credit cards tracked individually, payroll clearing and payroll liabilities, tips payable, gift cards outstanding, and accrued expenses. This level of detail is where generic templates always fail you, and where this system starts to shine. But the real day-to-day payoff shows up next in how you classify the costs of actually running the place. Once the balance sheet is organized, the biggest day-to-day payoff shows up in expenses, because this is where restaurant owners feel the financial story in real time. The sample chart groups operating costs into practical, actionable buckets. Direct operating expenses capture the granular details: china, glassware, and flatware, kitchen and restaurant supplies, cleaning supplies, decorations and guest supplies, linen services, and permits and licenses. General and administrative items cover over and short, bank fees broken down further into standard bank fees and merchant account fees, plus insurance. Professional services get their own lane: accounting and bookkeeping, consulting fees, and legal fees tracked separately. And facilities are crystal clear: rent and lease, utilities, garbage removal, pest control, repairs and maintenance, and equipment rental. Add POS fees, phone and internet, and even a catch-all Ask My Accountant account for temporary classification. The implication is powerful. When expenses are organized the way operations actually work, you can pinpoint exactly if your restaurant is truly making a profit, how it generates that money, and crucially, exactly where your dollars are leaking out. This represents more than just a new accounting system. It's a complete paradigm shift in how restaurants approach their financial health. What this framework resolves is the chronic restaurant problem of, I have numbers, but I don't trust the story they're telling. By treating the chart of accounts like mise en place, you're not just labeling accounts. You're building a repeatable system. The numbering ranges create order. The restaurant-specific details, separating food versus beverage inventory, tracking credit card receivables, keeping tips payable, and gift cards outstanding in liabilities, make your reports match reality. And once the structure matches reality, something powerful shifts. You gain short and long-term understanding of your business. You move from flying blind with generic tools to navigating with precision instrumentation specifically designed for your unique industry. You elevate your role from a scrambling operator to a confident restaurant CFO, making decisions based on crystal clear data rather than gut feelings and rough estimates. Every dollar has a story, and now you can read every chapter. So let's recap the key insights from our journey. First, restaurants are unique hybrid operations that need specialized financial tracking, not generic templates that treat you like any other small business. Second, the mise en place principle. Everything in its place, applied to your chart of accounts, creates unprecedented clarity and order. Third, the simple numbering system: 1,000s for assets, 2,000s for liabilities, 3,000s for equity, 4,000s for revenue, 5,000s for cost of goods sold, and 6,000s through 7,000s for expenses, becomes your unshakable organizational foundation. Fourth, restaurant-specific details like split inventory, credit card receivables, tips payable, and gift cards outstanding make your reports match reality. And fifth, detailed expense tracking, from linen services to merchant account fees to pest control, transforms your data from a blurry snapshot into strategic, actionable intelligence. The bottom line: your chart of accounts isn't just a bookkeeping tool. It's the plate that holds your entire financial meal together. Your next step is straightforward. Start with the framework. Avoid relying blindly on preloaded templates, and customize your accounts so they reflect how your restaurant actually operates. Then let your reports do their job. Show profitability, explain how you make money, and reveal exactly where the dollars went. The plate is ready. Now go create your masterpiece. Connect with Forks for the experienced accounting professionals your restaurant needs. Details in description below.